I'm Catherine Murray. Welcome to Market Call. Kim Bolton is on the show today. He's portfolio manager at Black Swan Dexteritas. He is going to take your calls, emails, tweets, and video questions on technology stocks. You can call us toll free at 1-855-326-6266. You can also send us an email. The address has changed just slightly. It is now marketcall@bnbloomberg.ca. Kim, good to be with you. Thanks for coming in.
Thanks for having me.
Let's get your take first in terms of the tech sector, whether you're looking specifically here in Canada and or the United States as it relates to the rally and the momentum specifically that we've seen in the U.S. Does that continue?
Well, the show plays on until it's over. I hate to sort of be quaint about it, but that's the way we manage our portfolio is that we're probably about 95 to 100% fully invested all the time. And then we have an overlay of short derivative equity indices that protect us from the downside and the volatility in the market. But we primarily are fully invested. Right now, it's much better to be long. We have a couple of single stock shorts, but it's mainly a long portfolio. And that, that proves to be the correct way to be in this melt up of the market.
So let's talk then a little bit about how you look at the tech universe. There's so many subsectors or industries within tech. What specifically is the way that you look at the universe? And I know we have a chart.
Yeah,
yes.
We might have a graphic up there. So Black Swan Dexteritas, BSD, actually evolved out of a bunch of serial tech entrepreneurs. I was a portfolio manager for the last 30 years. These serial tech entrepreneurs came to me, said they own their own private businesses. They are involved in private equity and venture cap, primarily in the tech sector. But they wanted me to actually, and our team, to manage the publicly traded technology sector.
Okay.
So we become their eyes and ears on the public side. And it's a great give and take because they are our eyes and ears into the private technology arena. And so it's a great give and take. Technology sector, as you know, Catherine, depending on who you talk to, it's right around a quarter, 25% of the world's global market capitalization of all stocks around the world. That's just on the vendors, but if you actually take in the end users, it starts to grow up to about 40, 50%. Catherine, as you probably know, so many companies out there actually call themselves technology companies because they've embraced the efficiencies and the effectiveness of actually bringing on hardware and software to make their business more efficient and effective.
So when you are looking to make investments, are there certain areas right now that you think are thematic and investable?
Absolutely.
And what are they?
And it evolves over time. We've been doing this now for about 5 years. But about right around 20% of the portfolio is in semiconductors, both on the digital, the analog, and then the field programmable. About 20% is around the software application, what you always hear about is SaaS, software as a service. And then into the internet software is about another 20%. So there you've got about 60% of the portfolio. And as a lot of people have told us, it's evolved that way, but that is the place to be, into the semis, the software application, and into the internet software. Then beyond that, there are particular sort of themes and trends that we grab onto out there, like the 5G, like digital twins, into the likes of hyperconverged infrastructure.
What do all those mean? Let's talk about that for a second. I think we've got a minute. So,
okay.
5G, of course, we know is the next rollout for telecom.
Yep.
Okay.
And that's going to be huge. Because it's going to improve the speed, the latency. No longer, for example, when you go indoors, you sometimes lose the signal. Well, it's going to be going off sensors. So 5G is a big, big thing. Okay. It's interesting, 5G is also giving some momentum to the hardware stocks, as you can imagine out there. Digital twins. Digital twins is a big, big business, particularly in factories and environments. Catherine, think of digital twins as avatars. So you take a real object, and then you take that real object and you put it on your screen. And then if that were a machine in a factory, your machine is running, but on your screen, you can actually fiddle with the speed and what's going on. You can make it more efficient without actually taking the machine off. You can do it in environments. I mentioned hyperconverged infrastructure. Fancy words. Basically, all it is software in a data center. Because in the past, data centers, if they ever wanted to upgrade, they bought new hardware. But companies like Nutanix have come out, and what they do is they put the software into the hardware, and then they can actually upgrade it in simple terms.
Interesting. All right. We're going to take a short break. We're going to be back with Kim Bolton. He's portfolio manager at Black Swan Dexteritas. He is answering your questions on tech stocks. You can give us a call at 1-855-326-6266. Let's take a viewer email right now. It's from Mark, and the subject is Take-Two Interactive. TTWO on the NASDAQ is the stock symbol. Please comment on video games, the industry, especially in regard to Take-Two Interactive. What do we think about this space?
Thanks very much. Take-Two. Take-Two is in this huge growing industry. It's growing at about a CAGR of about 25 to 30%. It's all in the esports side of it. There are really sort of three primary distributors, publishers out there in the public domain, one of which is Take-Two. The other ones are Electronic Arts and Activision Blizzard. We don't own Take-Two right now. We have in the past. But it's a lot more expensive, actually, when you look at it on a PE multiple versus Activision Blizzard in EA. We've actually taken the money off on Take-Two and also Electronic Arts, but we own Activision Blizzard.
How do you think about what names you want to own? What's the deciding factor? Because obviously these are content players as well. You have to make sure that they've got the right content, the new games coming up. That's almost akin to retailers that have fashion risk.
Yeah.
So it can be difficult to own some of these names in terms of understanding what the new games are that are going to come up and really warrant the sale. So how do you look at it? How do you decipher that?
It's a great question, Catherine. And it's a long process. And it's, you know, the game out there is actually to get a head start on a lot of these things. So what we have, I mentioned before that we started out with some serial tech entrepreneurs from the private side, and we become their eyes and ears in the public. Every month we have an investment committee and we meet. This subject in the gaming and in the esports is very, very topical because back in June, we did this 1 hour investment committee conference call, and we actually have some gaming companies out there. We have one group out of Israel. We have another one out of Russia, Playrix, who is involved in this space, and so we actually learn from the private people and how they're participating, and they sort of take us down this rabbit hole, and then we go to our buy and our sell side to actually research it. And I have a research fellow here in Toronto, another one over in Israel, another one in the Valley, in Silicon Valley, and then we drill down and we look for the leadership in those. So we look for the themes, then we look for the trends, and then we look for the leadership in those themes and trends. And gaming, i.e. into the esports, is a very burgeoning business out there.
Okay, let's take a call right now. Jerry in Vancouver, go ahead.
Good morning to both of you. Can you give me a view on Microsoft? Would you be a buy, sell, or holder at this level right now? Is there much upside left on Microsoft next year or two? Thank you very much.
Thank you very much. And it's Jerry?
Yes.
Yeah, thank you very much, Jerry. Microsoft, yes. Microsoft is a core holding for us. We have about just over 3%. We've grown it up to about 4.5%, and we took a little bit of money off the table recently, but it's still, it's certainly in the top 10 of our holdings. Does it have a long runway ahead of it? Absolutely. It just is firing on all cylinders. Right now, trading up at 112. It has the software side, which it made the transition from the hardware over into the software as a service on the subscription, and then it's a big play into the cloud side. So number one out there in the cloud is Amazon Web Services. They account for about 68% of the market in the cloud, and then second is actually Microsoft, and then Google. So the runway is extending a long way.
Okay, let's take another caller right now. Danny in Pickering, Ontario. Go ahead.
Hi, thank you for taking my call. Can you please tell me your opinion for Salesforce? Thanks very much.
Salesforce.
Oh, Salesforce. That's a very good question because they're actually reporting tonight.
Okay.
If I recall, I think their earnings per share are 47 cents, and then the revenues are right around, I think it's $3.2 billion. Salesforce is an expensive company. However, they consistently not only beat on the top and the bottom, but they also extend their guidance out there. They're running at a forward PE of 54 times. Which, when you compare that to the S&P current levels, just around that just over 2,900, which is trading around 1,700 forward, 17 times forward. 54 times is pretty expensive. However, we still own. We have about a 2.5% position in it, and they. Not only do we own it, but we also bought into their modules, so we have their Lightning Force to actually help us in our customer relationship management. So we know the stock, we know the company, but we know the products pretty well too.
Okay, we're going to be back with Kim Bolton. He's portfolio manager at Black Swan Dexteritas. He's answering questions on tech stocks. You can give us a call at 1-855-326-6266. All right, let's take another caller. Matthew in London, go ahead.
Hi, thanks for taking my call. I'm just wondering about Yandex. So they're growing their revenues very fast and wondering what you think of it. Thanks.
Thank you, Matthew. Matthew, we don't own Yandex now. We have. Yandex is the search engine in Russia.
Okay.
We know it very well because actually one of my partners, Lev Lebayev, is the founder of one of the large companies, VKontakte, which is like the Facebook of Russia. So we got to know Yandex very well. We've sort of traded in and out of it with the geopolitical uncertainty out there with the new sanctions and so on. I agree with you, Matthew. It is growing. But we're looking for a little more steady in the geopolitical side before we get back in.
Okay. Let's take another caller. Caroline in Burnaby, BC. Go ahead.
Yeah, my question is about OLED. What's your analysis of this stock and what direction is it going? Thank you.
Thank you very much, Caroline. Universal Display. Fascinating company. Both to Caroline and to Catherine, I mentioned before that there are about 6 or 7 trends that we look at there, one of which is this oxide light emitting diode OLED, which is all the patents for Universal Display in this space is owned by Universal Display. So when companies like Sunny over in Japan, Sunny Optical, or Samsung, and they start to build these OLED, which is the next generation of LED screens. I'll give you an example. So this is an iPhone X. The iPhone X has an OLED screen. The iPhone X is a lot more powerful than some of the others, and one of the reasons it's so powerful is because of the OLED screen. The screen is a lot thinner. In the old LED screens, there would be about 12, 13, 14 layers. In here, there are only about 3 or 4 layers. As a result, you can actually get more power. You can get more CPUs, more graphic processing units in there, and it just makes your devices more powerful. And so OLED, it's been in the last 12 months, it's been up as high as, I think, 172, down as low as 85. I think it's trading right now around 125. We own it. We have about a 3.8% position in here. And we have a price target on here of $160. So Caroline, we love it.
When you take a look at this space, who else do you look at within the competition? Or do you? For OLED?
Universal Display doesn't have any competition. This is a Warren Buffett special where they have a monopoly on the patents. And so if anyone wants to build OLED screens, Universal Display gets a royalty on it.
Okay. All right, let's take another caller. Andrew in BC, go ahead. Andrew, are you there?
Oh, hello.
Hi,
it's Andre.
It's Catherine. Oh, Andre. Okay.
Oh, yeah.
Thank you.
Oh, great. No problem. Thank you for taking my call.
Okay, go ahead.
Please, could I have the analyst comment on Hewlett Packard? Its 3D printing division. It just reported the third quarter revenue, and it's up 12%. It also just bought Samsung's division for printing. Could you just have the comments regarding Hewlett Packard and its business model moving forward? Thank you.
Yeah. Andre, this is in the hardware space, and as I talked about earlier, we're sort of limited on the hardware, although we do see a resurgence coming back. And Andre, we do follow Hewlett Packard, we follow the other 3D printers, the pure guys out there in 3D printing systems and so on, which have had a great resurgence over this year. The only one that we actually own on the hardware, we don't own Hewlett Packard, but we do own Cisco. Because yes, they have the hardware, they're on top of this whole 5G space, but they also have that software as a service transition that they have going on. And they have one of the beauties of some of these hardware companies is that they actually have a decent dividend on top of that. We're looking at it a lot more closely, Andre, and we may get back into it, but at this point, we don't own it.
Okay. And we're going to take a short break. Stay tuned. Past Picks are coming up next. It's time now for Past Picks. The first one up is Red Hat. Ticker there is RHT, trades in New York. Kim, what do you think about this name? It's up by 5% from when you recommended it. Let's talk a little bit about the company and the thesis here.
Okay. Well, I talked about it back on July 9th. It was 139. It reported shortly after that, and it actually came off about $10 down to about almost 125, but it's worked its way back. It's a darling out there. It's involved in the cloud arena, and why it's a darling is that it's a service provider for the cloud, and so it doesn't sort of favor AWS or Microsoft Azure or Google. So when someone is moving from their server room into a private or a public cloud, they'll look to Red Hat to actually come in, hold their hand, and customize how it's going to be done. They're out of North Carolina. They've done very, very well. I think one of the reasons that it's starting to rally back is because we're going to be quickly approaching their quarterly earnings, which is on September the 24th. So it's a leader in the open source technology, and it has high gross operating margins. right around 65%. It's a terrific business to be involved in.
Maybe we can take a look at it from a longer-term perspective as well. As long as we can go back, the company became publicly traded in the early 2000s. Be interesting to see what the return has been so far. Because my question is, is this a name that you just put in your portfolio and you own it forever?
Well, so we've been managing this portfolio for 5 years. I talked about that investment committee. We have a couple of people, retired professionals, executives, one from Microsoft, two from Cisco. It was actually the fellows from Cisco that opened my eyes into Red Hat, and especially going back about 3 years ago, when we really started, as a result of the investment committee and all the research that we did, we saw the long runway for the cloud. And so, you know, our initial buys into, I remember the first time that we bought Amazon was at $386. And Amazon is trading right just shy of $2,000 right now. It's only 3 years later. Morgan Stanley just came out this morning and has a one-year target of 2,500. So the runway for the cloud is very, very long, and Red Hat is perfectly placed into as a service provider for the cloud, and also a service provider into something that has really got some legs under it, and that is into the open source structure that is technology that is out there.
Okay, let's take a look at the next one. Twitter is a past pick. Let's talk a little bit about the company, and what do you expect to see? You know, people for a number of years have always thought this was going to get taken out. Talk to us about the fundamentals, the reason for owning it, and or if you think that it will be taken out.
Why do we own it? You know, there aren't that many players that are that have those leadership qualities in the social media space. It's Facebook and Twitter. As a result of the privacy issues that are out there, the government regulation that is going on, the fact that they're having to clean up their platform, so their monthly daily users has come down, and it reflects over into the stock. We actually had larger positions in both of these. We took a little bit of profit off before the earnings for Q2. We added back in, so we're back to our original position on both of these around right around 3% on the portfolio. But Twitter/Facebook, they're sort of treading water, but I think you'll see as we go into the next quarter of how they're monetizing. They've cleaned up the platforms, and then they're continuing to monetize through the advertising that they do. And I think you'll see in coming up in October that the earnings are going to be spectacular.
Okay. For Twitter as well as Facebook?
As Facebook.
Okay.
It's really important. Sorry,
it's easier to see it with Facebook. I'm still wondering a little bit with Twitter.
You mentioned as a takeout target at $34. No, I'm surprised that it wasn't taken out when it was down in the teens, which wasn't that long ago. Right? But up here at $34, but we still have a target price of $45 going out 12 months.
Okay. Let's take a look at the next past pick. It's Activision, which we talked a little bit about some of the gaming companies earlier at the top of the show. But what do you think about Activision here and now in terms of how much money you really want to put towards this position?
So Activision is involved in that in the gaming side, both as a publisher and also as a distributor. Not in the hardware space, but one place, and the reason that we particularly like Activision is because of their leadership. I was going to say dominance, but certainly the leadership into the esports business. Esports last year had revenues right around $350 million. They're expecting next year to be $1 billion. Activision, Blizzard is a leader in the distributor, also on the publisher, but they're also very much in the esports space They set up and they worked with the social media companies, and also they have a contract, a joint venture with Amazon, and they have Amazon Web Services for the streaming of this thing called Overwatch. Have you ever heard of Overwatch?
No.
Overwatch is the esports professional arena. So there are, and we.
No wonder I haven't heard of this. Okay.
But you're going to hear about it.
Is this the watching of the gamers playing
Exactly,
sports? Okay.
which now actually has a larger audience than that of the NFL
Right.
or the Major League Baseball.
Okay.
You don't hear as much about it because half of that professionals out there that now are streaming into Madison Square Gardens.
Right. So
half of-
how do you play into this then? Where is that company in relation to this?
Okay, so Activision actually owns 40% of Overwatch,
Okay.
which is the league. I forget the fellow's name that owns the New York, New England Patriots. Patriots. He just set up his professional sports team on this Overwatch, the same as the New Jersey
Okay.
Jet guy.
But
actually.
Overwatch is private,
Yes.
and Activision owns 40% of it.
Correct.
Are they profitable? Do we know?
Is Overwatch?
Yeah.
We don't know.
Okay. All right.
But certainly Activision Blizzard.
Okay, but it's a nice, it's a segment of the business that you like about Activision.
Love it.
Okay, we're going to take a quick break. We're going to be back with Kim Bolton. He's portfolio manager at Black Swan Dexteritas. He's answering your questions on tech stocks. You can give us a call at 1-855-326-6266. Welcome back. Let's take another caller. Dave in Toronto. Go ahead.
Hi, thank you for taking my call. I just wanted to ask about Broadcom. To me, it looks like it has a really good PE ratio, and it's a dividend grower, and they just acquired CA Technologies, and the marketplace hasn't really considered that. I think it's pretty cheap. I wanted to ask the guest, does he hold it in his fund? What does he think of it for holding it and buying it right now? Can I get street consensus as well? Thank you very much.
Okay, great. What do we think about Broadcom?
Thanks, Dave from Toronto. Broadcom, we don't own it. We own a lot of their competitors. I'll tell you the main reason we don't own it is because we haven't met with them. We have coverage on it. Mm-hmm. We follow them, but we like to meet the companies eventually. And so in that space, we have a number of their competitors. So I'm going to have to pass on that, Dave.
What would be some of the competitors that you own that you like?
You know, they're involved in sort of that slash software as a service and also somewhat into the internet software. They tried to get into the semiconductor side with the purchase of NXPI, but that got squashed by the Chinese government. So in that software as a service side, names like Salesforce,
mm-hmm.
like Workday, Splunk, Tableau.
Okay.
And then into the internet internet software space, it would be the Alibabas and the Facebook and the Twitters.
Okay. And from a consensus perspective, Dave, the 71% of the analysts rated a buy, 28% have it a hold, no sells on the stock. Average price target is $286 and currently trading at $215. Let's take another caller right now. Renee in Montreal, go ahead.
Yes, hello. I'd like to have your guest opinion on Skyworks Solutions, which is involved in the 5G technology. I've had the stock for roughly 2.5 years and made fairly good money on it. Now it's been consolidating for the last 18 months. I'd like to know if you see any specific reason for that, and what's your outlook going forward for a long-term investment, let's say 5 to 10 years. Thank you.
Thanks, Renee from Montreal. Software, Skyworks. Skyworks, we don't own it. We did own it. We owned it for about 3 years. Skyworks is in the radio frequency business, so when you do a teardown of the cell phones out there, they are the leader when it comes to the radio frequency side inside the phones. But you're right, it's just sort of been fluttering here. We actually took the profit just before the Apple earnings that came out in July. And we actually took the money there and added it back into Apple because we expected them to do quite well. It's a strange thing. I think the reason that Skyworks is just sort of treading water at this stage is because they've diversified on the clients, but they still hang their hat on Apple. And then there's a lot of competition coming in the business that they're involved in, although they're trying to diversify. So at $94, it may break out. We don't own it right now.
Okay. We're going to be back with Kim Bolton. He's portfolio manager at Black Swan Dexteritas. He's answering your questions on technology stocks. You can give us a call at 1-855-326-6266. Welcome back. Let's take another caller. Louise in Vancouver. Go ahead. Louise, are you there?
Yes, I am.
Hi, go ahead.
Oh, sorry. What are your thoughts on Alibaba? I'll hang up. Thank you.
Thanks, Louise. Yes, we own this one. In that, you know, Alibaba is one of the TATs, T-A-T-S. So Tencent, Alibaba, TSMC, and Samsung.
Okay.
This is sort of like the FANG of Asia. And Alibaba is front and center. It's had a very rough go. It actually came off, although it's come back here, but it got all the way down to, oh my gosh, down to about 145 and is back to, what, 178 here. And it just got, you know, all of those TATs over in Asia got dragged down because of the trade war situation, which is ridiculous because they weren't going to be affected by the trade war situation. It was more about goods, and what these folks have is mainly services. And so Alibaba is involved in certainly into the e-commerce, as we know, but they're also involved into the entertainment side, even into the gaming side. And certainly into the cloud revenue side. So we got about a 3% position, trading at about 178, I think I saw there, and we have a 12-month target of 250. And it's not that expensive. Certainly with the pullback here, it's sort of trading around that 22 times forward PE.
Okay, so you'd be buying it.
Correct.
Okay, let's take another caller. Jerry in Toronto, go ahead.
Hi, Kim and Catherine. My question is about NVIDIA. I've done really well on NVIDIA. I've had it for a couple of years. And Just wondering and sold half of a position. Just wondering what your thoughts about it from a valuation point of view and future upside is. And Catherine, if you could give us the consensus,
Sure.
I'd appreciate it. Thanks very much.
Great. What do we think here?
Thanks very much, Jerry. We have a 1% position. We actually bought it recently when it had that pullback down to just around that 255 level. There's a lot of volatility around this, but as soon as they announced their GE Force, their new graphic processing unit, which has this new technology of rays that actually, when they announced their earnings recently, it traded down considerably, down to to the low 250s. And the main reason for that is because their cryptocurrency business went from a year ago $250 million in revenue, and they reported this year $18 million. And so everyone thought that the air was coming out of it. However, that is being picked up by the gaming side. And then they recently came out with this GE Force, and there's 3 versions to it that actually have this new technology that makes it more realistic, has better latency for their GPUs. And that's precisely why it's lifted from that 255 up to the 276. And Jerry, I'm just looking for, we have a price target going out of 250, 12 months out.
All right, and from an analyst perspective, 73% have it rated a buy. This is NVIDIA. 24% have a hold, 2% sell. Average price target is $284. Let's take another caller. Ben in Vaughan, Ontario. Go ahead.
Catherine, thank you for receiving my call. I'd like to ask, what is your opinion about advanced micro devices? We know that they are in tight race on server market share with Intel.
Mm-hmm. So if I can just sort of back up, this is in the whole semiconductor space. So the semiconductor space is mainly made up of 3 parts. There's digital, there's analog, and then there's this thing called field programmable that are actually chips that people can actually program within the chip. The digital is primarily geared to the likes of the automotive side, but it's a higher power and it's a more volatile. One of the problems in the digital side is that you have a lot of Japanese product coming on stream. We actually play more so over into the analog space, and the analog space is more involved in the likes of sensors, sensor-type chips. So that, again, is into the automotive, but it's also involved into the 5G. And we believe the 5G is going to have great legs going forward with the deployment of that. So we own a little bit on the digital side. We don't own the AMD. We do have a smaller position in NVIDIA, but we have an overweight position both in the analog with the likes of Infineon, Micron, and then in the field programmable side, really the king out there, and it's a great stock, is Xilinx.
Okay. All right. We're going to take a short break. After this, we're going to take a look at top picks. They're coming up next. Time now for top picks. First one up is Workday. Let's talk a little bit about what this company is and why you like it.
Okay. Workday, together with Salesforce, are sort of the poster childs of that subscription software as a service platforms. Workday started out having a software as a service really aimed at human resource people and making their life, their business, their process a lot easier. And so they offered a software service that you could just plug and play, and and it's just taken off. They had to have something more in their toolbox, and so recently they bought a company, and they bought it, and it was quite a price. They spent about $1.6 billion on it. It was pretty recent for a company called Adaptive Insights. And this accelerated them into the space of enterprise resource protocol. And that's sort of like project management, but it's a software as a service. So I think the reason that Workday has done so well is they've carved out a space in the resource side, in the financial side, in the portfolio management side, and then they've issued that early as a subscription. Most companies, if you go back over the years, would offer it as a license.
Right.
But now they have recurring revenues that smooths things out for them. Now, that's all on the plus side. On the losing side, on the bad side, they're actually losing money on a GAAP basis.
Okay.
But they reported a couple of months ago, for the first time they were under 30% revenue growth, so they got beaten up.
Okay.
But they're reporting actually next Tuesday, September 4th,
but you like
and
it.
they love it.
Okay, let's take a look at the next top pick. It's Alphabet or Google.
Okay, Google. It just got upgraded today by Morgan Stanley. It's got some great legs under it. They put a target on it of 1,500. It's really running on all cylinders. They have a very, they're the king of the search engines for the Western world. They're number 3 in the cloud, a distant 3, but they're growing faster than Microsoft Azure. They're growing faster than Amazon Web Services. But one side, and you can see it, and this is the advantage of actually having an analyst in Silicon Valley, because they can actually see the development that they're going out there.
Let's take a look at the next top picker. We're going to run out of time. Fanuc.
Fanuc. This is one of those trends that we talked about before, which is in the robotics side. And Catherine, there aren't that many players out there. There's Fanuc and Yasukawa. They're both Japanese. And then there's ABB. The interesting thing about this space is it has some cyclicality. So if your viewers actually go back, you can see that the cyclicality ends up being sort of 7 or 8 months where they just sort of tread water, and now they're starting to come out.
And Tesla buys their products.
Tesla has their robotics. A lot of the other automotive companies out there have their, there's only a few.
All right. Okay, we've got to leave it there. Kim, nice to be with you. Thank you very much.
Thanks for having me,
And
Catherine.
thank you very much for watching. That is it for this edition of Market Call. And please do, of course, consult a qualified financial advisor before making any investment decisions. Thanks again for watching.